Market set to rally this morning, but will the inflation data kill that trade? That's coming up on 3 minutes on Markets and Money. This morning, we're going to be taking a look at the producer price index, both the month over month and year over year rate of change. That's expected to come down a little bit this morning. Wouldn't be surprising because we've seen import prices beginning to come down as economic demand really starting to show some signs of slowing. So that could help provide some support. Now, futures are up this morning before we start the trading day. Of course, yesterday, the market did trade higher as number 2 Fed member Lael Brainard gave some hints that the Fed is closer to maybe slowing that pace of rate hikes, but markets couldn't hold it, sold off into the afternoon. Now, this morning, futures are pointing higher ahead of that inflation data. Now, for some reason, that inflation data comes in hotter than expected, would see the market sell off some more. Just like we talked about previously, the markets got very oversold back in June, of course, and that bottom and that MACD buy signal is what gave us that rally that rallied into mid-August, of course. Then we had the sell-off in September. Markets got very oversold again. We talked about that very negative sentiment in the market, that nice setup that we had, got the MACD buy signal. That gave us the rally back here that we've had recently. Now, importantly, this market rally is getting a little bit long in the tooth here. It's been a nice trade. We're running up into the 200-day moving average, but unfortunately, we're now continuing to set these lower highs, and we've used up most of that buy signal that we put together with the MACD and those really oversold conditions. Bullish sentiment has gotten a lot better. As of late, of course, a lot of that bearishness has been reversed. People getting excited about the rally, hopes that the Fed is going to pivot. That's not a great setup heading into the next couple of weeks. So again, use this rally to raise a little bit of cash. Obviously, we've had a nice rally here, but as we've been talking about, the risk going into the first part of next year is all these rate hikes that the Fed is doing. That's going to show up in the economy, slower earnings growth, slower economic growth, rising unemployment. Those are the risks going into early next year. So be sure and use this rally, raise a little bit of cash as we've been talking about. We did that yesterday. We trimmed back on some of our tech stocks yesterday, as well as some of our industrial stocks, raising a little bit more cash. We're now carrying about 17.5% cash, about 38% equities. So again, underweight equity exposure here, overweight cash, at least temporarily. Fixed income, keep that on the short side, but we're now starting to see a better setup for fixed income as well to extend duration. So again, there's some things that are going to be coming along in the next month or so to be paying attention to as we get into year end. But for now, just remain a little bit cautious. That's 3 minutes on Markets and Money. See you back here tomorrow.